Ed boy.
Gang. What's good? It's been a minute since I did a video like this, but I'm so excited to do it again, gang. What's good? What's been up with y'all? How everything been? I hope everything been going smooth with you and your family, all that good stuff. I ain't really gonna waste y'all time into it, man. I'm sorry that I haven't been posting these trading videos lately. Just been trying to get the strategy back right. You know, you don't want to rush into this type of thing. Just trying to get back right. You know, I had to revisit the strategy. I had to go back and watch some videos. I had to go and just kind of practice a little more, and I'm still in the phase of practicing, just trying to get it back right. You know what I'm saying? But I'm not gonna waste y'all time. We kind of gonna jump right back into it. I got something new that I'm gonna show to you guys that I learned from ICT himself. It's gonna be something that I use in like my day-to-day trading, or just something that I use going forward that's gonna help me become a better trader. It's just something that I like to add. And it's called SMT Divergence. But I'll try to explain it. I'll try to show it later on in the video. Well, no, I'm definitely gonna show it in the video, but I'll try to explain it as best as I can in the video. Like I said, I'm still learning the strat. I'm still learning this extra little confluence, but it's something that's very, very helpful to me. So without being said, I'm gonna go ahead and jump right into the video for the gang. So what we have here, you see right now, is the futures for S&P. I really like to trade US 30, or what's referred to as the Dow Jones, but S&P has become one of the indices of choice because I kind of like it a little better. It moves a little bit better than the other indices, although they all tend to move the same. They do. S&P does move at times, move like how I want it to move. So with that being said, I'm gonna take you back into a trade that I took last week. As you can see, we're on the daily. We're inside of this here dealing range right here. We push down up under this low right here. We formed this other low, then we push back into, I believe this is the equilibrium. About here is about above equilibrium, if I'm not mistaken. We came back to fill in this gap. We're also inside of a fair value gap, but we more so wanted to fill in this gap, and I do believe we are above the 50% range. Let me see. Let me just double check. Yeah, at that point it was. Well, let me just do this for that. But yeah, we were above this gap here. We were above this 50% range right here. We got somewhat equal highs back here. Price may wants to come back and take this out. Who knows? Just gotta wait and see what happens. Or it may just push. We may just be getting a push into this gap right here, and then we're just gonna get a continuation down. We'll see. You know, we'll see what the market gives us. We can't rush it. But I'm gonna take you into the trade. I believe it was the 29th. The 29th and the 1st, yes. So I have the 29th and the 1st here. As you can see, I got positions on the S&P, and I also had a position on the Dow. So what I'm gonna do for you guys, the 29th here, I'm gonna show you what I saw when I took the trade. And let's just bring up Dow real fast. Let's go into the 5-minute. So boom, this is basically something that I had saw moving forward into the that day. So basically what I'm going to show you guys is called SMT Divergence. It's a technique that helps me, it helps shows which indice is accumulating and which indice is stop hunting. So you kind of want to get, so with this SMT Divergence, you want to get the indice that's accumulating. The one that's stop hunting is the one that tends to show the weakness. So you definitely want to try to get the one that's accumulating. I'm gonna bring up a side-by-side chart. I'm gonna put the Dow right here, and then I'm gonna put the Dow. This is the Dow, this is NASDAQ. Obviously you can see it. So this is the same time frame. I have them set so that they show the same time frame. There was some weakness right here that I saw in the Dow, and I believe I saw it in S&P too. Let me see. Let's see what we got here. Yes. So when I was looking into this trade right here, I had these lows marked up on the S&P right here. These were the lows right before the news embargo was lifting, and I had it taken out. I had it coming down to take out the low on the S&P. I'm going to show you on the S&P because I believe I took both trades on this. I took it here and I took it on the S&P. But what divergence is, it shows the weakness and who's accumulating and who's stop hunting. And what that does, you want to get the indice that's accumulating, because the one that stop hunting is the one that tends to show weakness. So with that being said, as you can see right here on the Dow, we have a high right here, and then we have a higher high. So with that being said, this would be the indice that would show weakness. And then we have the S&P over here. We have high back here in the same time frame. And if you look at the line right here, where I have the line on the S&P, that same line that's on the, you can see the same line that's going down on the Dow Jones. For people that don't know on TradingView, this is the same time, this is the same candle, the same time that these two indices have. It's the same thing. As you can see, as I move across, the line moves with it. You can see the same thing. So at this time, you can see that the Dow had formed a high, and then as we get over that news embargo, which is the 8:30 candle, which is right there, and we start to move away, we start to see that the S&P had formed a high, and the Dow Jones has also formed another high. But if you look at the Dow, you can see that the Dow has broken its high right here. Means that it made a higher high, which shows that it's stop hunting. It's stop hunting. So this indice at this time, you can see that it's kind of showing its weakness. It means that it was accumulating some stops right here. It went a little bit above. If you can see at the top right here, look right here, you can see what the high is right there. If you see the high, it's 31,068. And you can see the other high right here is 31,071. So it went above this high, which makes it a stop hunt. But if you look on the S&P, you have this high back here at the same time, but this high is lower than this high right here. So this right here shows me that the S&P was not willing to go above this high, because it didn't for some reason. I guess it didn't want to. I don't know what the algorithm wants to do, but I can use this to my advantage, because now that I know that this high stop hunted, I know that more than likely that this high for the S&P won't be taken out. So all I have to do is find my entry on those lower time frames. And remember, I was aiming for this low. That's it. I didn't need to do anything. All I had to do was aim for this low right here. This was my target for that day, and then I was done. I didn't want to try to catch a second move or anything. that's one thing I'm trying to do, just catch one good move and just be done for the day. So if I can, I don't know if I can show it on the 1 minute time frame. I don't know if it's going to show on the 1 minute time frame, but we'll try. I'm gonna try my best for the gang. Definitely gonna try my best for y'all. Let's see what we can get. So this is that same scenario. This is that same high. Let me zoom in over here. And remember, the strategy is based on the fair value gap. So remember, this is that high. Oh, well, it's not showing it here. Let me go right here so that it'll show. So remember, I don't think price showed a higher high over here and a lower low over here. So price isn't going, I don't believe that price is going to go below this, above this high. So basically what I can do here is just look for a break of a market structure shift, or a break of structure, whatever you want to call it. That would be, you can argue this one right here, the break of this low right here, or you could even argue, the break of this low, but this low would have been good enough. I'm not exactly sure where I entered on this time frame, but I'll show the executions in a minute. But honestly, once it broke this low, created this fair value gap, here's your entry. If you had placed your stop right here, probably would have got taken more than you would, definitely got taken out, obviously. Placing it right here would have probably been a very wide stop loss, but right here would have been your entry. This would have been your entry point, and you would have, and all I had to do was just take it right here to this low, and that was it. And that's a good move for, we'll use the high. We just use the high of this candle right here. Then we'll bring it down right here. A good 17-point move, that's not bad. This is actually very solid. Nothing wrong with that. Nothing wrong with catching 17 points. On US 30, it would have been the same thing. Just look for the break of the low or the break of structure. You know what I'm saying? That's when you get in. You could argue that when it broke this low right here, that this fair value gap right here would have been your entry. So had you taken entry right here, you place your stop either here or here for safety purposes, whatever your risk management allows you to risk, whatever you do for your risk management. You place your entry right there. We'll say, we'll get in on the high of that candle right there. Oh crap, sorry y'all. And then if you had gotten in on the high of that candle right there, you take it down to the low, you would have gotten about 100, about a 90 to maybe 100 point play, depending on whatever you did, But that's basically what the thing that I'm adding to my strategy is, the SMT Divergence, and it's been really helpful. Let me show you the executions. I think the execution show exactly where I entered. Yeah, so as you can see right here, I entered right here on this candle. Yeah, I entered right here on this candle. You can see at the 31.27 level, and then I got out right up under here. I took partial right up under here, and then I think I just took it all once it got down here, if I'm not mistaken, because I didn't, like I said, I don't need to be greedy. I just need to catch one move. That's all I'm learning. I don't need to catch 2-3 moves a day. One move and I'm good. But as you can see right here, I did make that execution from right here inside of that fair value gap, and it went right down to where I anticipated it. And then on the S&P, I believe I did the same thing as well. Let me get the executions going on for there. Oh, I actually entered too early on the S&P right here. I entered way too early. But nevertheless, This did work out had I entered on this candle right here. Oh, and I entered I entered the play very early. But nevertheless, had you entered on this candle, place your stop. You know, if had whatever your risk parameters would allow you to risk this play right here. And then once it, you know, I entered on this, the entry is right here on this candle. This is the candle you want to enter on once it breaks this area right here. Let me go ahead and let me mark it for you so that you guys can see it. This was the entry point right here. Inside of this was the entry. And look at how it just respected the fair value gap though. Yeah, it shot way up here, but look how it just respected this fair value gap. This is the type of thing you want to see when it comes to these fair value gaps, how it closes. You know, it's closing relatively lower in that area, which is something that you want to see. So, but I did enter early. You know, this is your entry candle, and as you can see, I wrote it down. I took partials right here. That's another thing too. I'm just learning to take partials instead of taking the loss. I took partials up on I should have taken it earlier up under this low, but that's okay. Well, I did. This was the low. This was the first low. I took partials under this low right here, as you can see, and then I just let the trade play out till it got here on this candle right here, and then it took me out. But that's the play. That's what I look for now when it comes well, one of the things that I look for now when it comes to this divergence play. It has been the SMT divergence, I should say. It has been very key. If you can see, I have a line chart right here on my main chart, because sometimes you can spot it just on the line chart. Sometimes you don't have to do this side by side in order to see it. You can spot it on the line chart, but I'm starting to spot it I'm starting to spot it side by side better. So I may take the line chart off after a while, but it's okay here for now. But the S&P, as you can see, we're gonna switch this to the S&P chart, and we're gonna switch this to NASDAQ because I got one more example I want to show you guys. Let's take off the executions real quick so I can show it to you properly. Oh no, okay, so it's not on there. Let me make sure that it's off on here so I can show it to you guys. And I think and it's right here. It's already actually marked up. But this is the other trade that I also took on the S&P. I want to show you something real quick before I show you just a good trade. This is divergence during the London session right here. So if we zoom in on NAS, because I remember this play, I remember seeing this. So if we zoom in on NAS, remember, look at the lines. If you look right here, you look at this low right here. This low right here is during the almost close to the London session. This low right here. And if we look over, at NASDAQ while I'm scrolling over on the S&P, just compare the lows. Look at the lows on the S&P right here, and look at the lows on NASDAQ at the same time with these lines, and just let me know, what do you see as you go over? What happened? What is formed right there? What do you see? Well, if you don't know, you can see that the S&P made a lower low, stop hunted right here, but NASDAQ made a higher high. So what does that tell you? It tells you that right now, at that moment in the London session, that the S&P was more of the weaker move, while NASDAQ, well, I'm sorry, let me rephrase that. The S&P was stop hunting, while NASDAQ was accumulating. So which one of these would you want to trade? Well, you would want to trade NASDAQ because it showed a willingness that it didn't want to go lower than its previous low, than that previous important low, because you got equal lows right here. S&P stop hunted to take out those lows. You got pretty much got equal lows right here. but Nasdaq did not want to go up underneath those lows. So Nasdaq is the one that's accumulating. This is the one that you want to essentially get in for a trade. And there's two ways I like to get in. The fair value gap is one way that I like to get in, but I also like to utilize the OTE, or optimal trade entry, that ICT has taught. You get in on that 62 to 79% retracement level. That is my second go-to. So honestly, what I do, if I could just use the 5-minute chart and just use the OTE, get in right here in between the 62 and the 79% retracement level, and then just ride it up above this high right here, and then just take it, whatever you're trying to get in at, whatever you want to do. I like to get in on the 62% level, depending on from what I see, and then I could ride it up. Let's just say you get in on the 62% level and you just ride it back up to this high on Nasdaq. That's 46 points for you right there. Or let's just say you were aiming just for 1 standard deviation above it. You got an 84 point play. Whatever you decide to do, that's on you. But as you can see, SMT Divergence is very, very powerful, and it is something that I'm using from now on going forward in my trading, because it's just very powerful. It shows what's accumulating and it shows what's stop hunting. So right there, I'm going to take this off for you, but that is just another entry technique that I like to use, is the OTE. It's very, very good if you know how to use it, if you use it in the right situation. So with that being said, that's a good trade for London session. That is a very good Nasdaq trade for London session. But let's move over to the US session. So if you look right here, you could argue that you don't see any divergence. There's no divergence. This is the starting time for the US session. Equities open, but as you can see, there's no real divergence play here. They're virtually the same. If you look at it, this high is higher than this high. If you look on NAS, it's the same thing. This high right here is higher than that high. So the other way that I like to use these techniques for the fair value gap is for a stop hunt. I'm gonna be honest, on this day, I was not sure what the indices were going to do. I couldn't really find an area of interest, or like an area that caught my eye on the higher time frames. So what I normally do, I just wait to see if price is going to give me some form of a stop hunt, and price did just that. This is a lot of wicks in a lot of area in the area on the higher time frames. This is a very, very big reversal. So basically what I did when I saw all these wicks in this area, I just waited for price to show me that it wanted to go into the opposite direction, maybe possibly take out this low right here, maybe take out that low right there, or possibly come down here just to test this low right here, to test this low right here, to maybe possibly take it out. Maybe it might not take it out, or essentially it could have probably aimed for that low. And it could have did the same. It did, but it did end up doing that on Nasdaq. It never came down here, but it did come down here and take out this low. As you can see, I had this as a target, this as a target, and I should have had this as a target instead of this as a target. I did learn that moving forward, that I did watch that. I did learn that. But this is the I have this marked up on the, I believe on the 1 minute time frame, if I'm not mistaken. There was a fair value gap on the 1 minute time frame, and all I was looking for was a break of structure and a fair value gap entry. And yes, as you can see right here, I got my entry right here. And as you can see, you get that break of the low. You want an energetic. You want to see. It's nice to see a very energetic move up under that low, along with the gap. With that gap, you want to see something energetic and with the gap. So now let me turn on the executions for you, just to let you guys know that it's real. And right there, I got in on this candle right here. You can see, I got in at 37.97 right here in this gap, and then I aimed for my first target. It did end up coming to, as you can see, it did come up down here. I sold 2 positions, by the way, as you can see, but it hit first profit target right here. And right here is when I moved my stop loss pretty much a little bit past break even. And I should have let the trade ride, but I had to step away from my chart for a second. Well, not for a second, for a while. So I kind of just took profit there, and I was just happy with that. I'm happy with enough. I'm learning not to be greedy. I'm learning to just let price be what it be, and let price do what it do. But as you can see, it did eventually come up and hit that second take profit, and it may have hit that third one too, if I'm not mistaken. It may have hit it. No, it didn't hit it. On the S&P, it didn't hit it, at least. Yeah, on the S&P it didn't hit it, but it did hit 2 profit targets that I had played out, which was an eye-opener for me. That lets me know that I executed this to the T perfectly. It was amazing. I couldn't believe it. And for the naysayers that say that, you know, even though it's demo, they say I don't do a lot, you know, they might say that you don't do a live. Well, hey, executions don't lie, baby. Executions tell a big story. You know, I got in and got out where I wanted to get out. And I believe I took the same trade on NAS. I probably entered very differently on NAS. Let's see. I may not have taken that trade on NAS, actually. Nope, it doesn't look like I did. I think I just took it on the S&P. Yeah, I just took it on the S&P, which was fine. And I'm gonna reset this paper trading account anyways. So yeah. But that's all I got for you guys, man. That's it. I just wanted to show you that I'm still here, what I've been doing, and have I still been trading. So I definitely still been trading. I just wanted to show one thing that I added, a very powerful tool that I learned from ICT that I added for extra confluence, and it's very, very helpful for me. Hopefully if you watch this, it can be very, very helpful for you. If I can help you out in any type of way, or if I can answer any questions for you, don't hesitate to ask them in the comment section. I will get back to you as soon as possible. But yeah, guys, I just wanted to show you the extra SMT Divergence for you guys, man. It's just something so powerful, and I love it. And as I'm saying this as well, I'm gonna go ahead and reset this because I want to practice consistency. So we're just gonna reset this paper trading account. No, I don't want 100,000. I'm gonna practice with 25,000 because I am practicing for the FTMO challenge. So I definitely want to practice with what I'm going to have. I'm practicing for that FTMO challenge. So yeah, guys, other than that, that's it, man. You have any questions or comments that you want to lay out, feel free to throw them in the comment section for your boy, man. And until then, I'll see you guys in the next video. Bless up, stay safe.